Okay, everybody, it is me, Gregory Mannarino. It is Sunday, December 26th, 2021. Welcome to my newest segment of Markets A Look Ahead. First of all, people, I hope all of you had a really happy holiday, Merry Christmas, and all that fun stuff. But you know what time it is? Well, it's time to get back to work. And I mean that. We have a lot of stuff I want to talk about here. And I want to put a perspective on a whole bunch of things as well. It doesn't stop for you and me. We're relentless, and we are not going to allow anything to slip past us, nor are we going to allow this entire freak show to take advantage of us in any way, shape, or form. I've been explaining to all of you lately, especially those of you who subscribe to my free newsletter, okay? Link in the description of this video. I've sent out several emails about this. We are not going to deviate from our current strategy to beat this entire shit show, okay? We understand what's going on. We know what central banks are going to do. It just makes our life easy. Seriously, it really does. Understanding the current environment, just paying attention to a couple of dynamics here and there, and that's it. That's all we need to do. And like I said, we can't lose. If we stick to our particular strategy, what is our strategy real quick? You know what this is. I'll tell you real fast just to get it over with, okay? We're in this market, okay? That means we are owning shares of stock. I happen to personally like the banks here. I've been explaining this for a while. More specifically, JP Morgan, Goldman Sachs, Bank of America. I think these three major banks are well positioned moving forward. I like other banks too, but I'm telling you my favorites here. All right. Every Monday, tomorrow, if you do subscribe to my newsletter, I will send you in your email box some more companies I feel that you should be owning as well. So just to sum that up, yes, we want to be in this market. Large cap, dividend paying stocks, period, the end, taking advantage of the freak show. I mean, look, just this Thursday, no surprise to you. I told you at the beginning of the month this would likely happen. We would get a new record high for this market, and that's exactly what happened. The S&P 500 closed at a new all-time record high, and it's not done. We'll talk more about that too. So like I said, we attack the market very simply by owning large cap dividend paying stocks. If you are so inclined, you should be trading around these things, setting up credit spreads, selling puts onto the market. Forget about buying calls unless you are an expert at doing that, unless you are hedging your bets. You shouldn't even be dreaming about buying calls here, people. I know a lot of you want that big win. You want to rip the face off this market in a week or two. Okay, that's all well and good. But the right way to stay ahead of this market over the long run is slow, steady income. And you achieve that by our plan of being in the market, collecting those dividends, setting up credit spreads, and selling puts onto the market. It's that simple. Period. The end. Okay, let's move forward here. So not only do we own this market, people, we are betting against the debt, becoming our own central bank, holding hard assets, physical gold, more specifically physical silver. I also think you should own platinum and palladium too, but silver number one, gold number two, platinum and palladium numbers 3 and 4. I don't know, however you want to structure it, okay? Cryptocurrencies absolutely should be in your portfolio as well. At least a small percentage of it. Okay, I know a lot of you don't like the crypto space. You've been saying this since, I don't know, Bitcoin 1,000, 2,000, 3,000. It's at like 49,000, 50,000 right now. All right. How many of you would like to admit that you had bought it back then? It's not too late, in my view. Okay. I sincerely believe Bitcoin, and I say Bitcoin because it's the mother. It's the mother of all of these things. Okay. It's going much higher. It's going to pull the whole crypto space with it. You understand? I think you do here. I think there's a lot of opportunity in the crypto space, not just in Bitcoin. like I said, I just talk about Bitcoin because it's the mommy. And all the other ones follow the mommy around. It's pretty easy to understand that. But again, like I say, all the time, the crypto space is volatile. If you cannot handle it, and I know this is difficult, it's even difficult for me sometimes, I'll be honest with you. When you see cryptocurrency XYZ, make a 40, 50, 60%, move up or down, it can rattle you a little bit. But if you understand the space and you realize that's how it works, it'll make it easier for you to understand. Me and my lions out here, we've been buying the dips in cryptos for years, okay? And frankly, ripping its face off. That's another part of our strategy, people. We're going to continue to buy the dips moving forward. The day that I tell you we should not be buying these dips anymore is the day you should worry, all right? But we are so far from that, at least in my view. But again, we're going to watch a few things. I'm going to talk about that right here. Anyway, so let's do what we usually do. Before we look ahead, let's look back just a little bit. What happened last week? Okay. This entire month thus far, okay, real quick, it's been volatile, but we did hit and close at a new record high with regard to the S&P 500 on Thursday. I think this market's going a lot higher. But again, we should also expect that volatility here. Now, we're not just looking at the stock market, okay? Most people who have no idea what they're doing are focused on the stock market. What is the stock market doing? Why is the Dow moving this way? Why is the S&P moving that way? Why is the NASDAQ doing this way? Why is the Russell doing this? No, you must look at the drivers. You all know that. And the driver of this market is the debt market, which is being completely run by runaway central banks, the Federal Reserve more specifically, okay? The entire stock market, I'm going to say this again. I want you to think about what I'm going to tell you. Honestly, the entire stock market, the value of the stock market, derives its value from what's happening in the debt market. So, what does that tell you? The stock market is a derivative of the debt market, which is being run by the Fed, pumping easy money into it. They're not going to stop despite taper talk and, meaningfully raising rates moving forward. I think you understand that. If we realize that the stock market is a derivative, you understand? It derives value. It's a derivative of the debt market. Again, what does it do? It makes our life easy. We understand what we need to be doing. Again, betting against the debt, becoming our own central bank, buying the dips in everything. You understand? All right, anyway, let us move forward. Tomorrow, the 27th, marks the theoretical first day of the Santa Claus rally. Okay. A couple of weeks ago, I was thinking that it might be in jeopardy with the whole Omicron wave, moronic wave, and it's still being pushed on the mainstream media pretty strongly. People are going to die, you're going to get severely ill, blah, 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 the fear factor, okay? They must keep you afraid. They make you afraid of one thing, what do? They control your mind. You turn into a zombie. Okay, but we don't rattle. We understand the bullshit. We can see through it as clearly can possibly be. All right. So with that said, like I just alluded to, tomorrow marks the Santa Claus rally. Now look, there's no guarantee here, but let's look at the setup in the market. Let's look at the setup real quick. The MMRI, Mannarino Market Risk Indicator, link in the description of this video. I want all of you to start paying more attention to this, okay? The Mannarino Market Risk Indicator. As a matter of fact, what we're going to do right now, let's have a little fun. Open up a new window, okay? And go to my website, traderschoice.net, or click on the link in the description of this video and look at the MMRI. Right now, it's sitting at about 89.1. So that means we're in the green. This does not mean no risk, people. It means low risk. We have to look at a few other dynamics, okay? It's not that hard to do. So we're watching the MMRI. We're watching the yield curve or the slope of the yield curve, okay? I will keep you on top of that, okay? So you don't actually have to focus on it. But if you're going to look at something else, you want to look at the 10-year yield. Right now, the 10-year yield stands at 1.495. Came up nicely, all right? This is a good sign. When you see the 10-year yield rise, when you see the yield curve increase slope, that means cash is making its way back into the stock market. You understand? It has the opposite effect in a fear trade. In a fear trade, cash leaves the stock market, makes its way into the debt market, yields drop. You understand? It's not hard to follow these things, the flow of money. You understand? That's how you can stay ahead of the market. Now, with that said, you want to obviously keep your eyes on the Dixie, or the relative strength of the dollar. That obviously plays an important role here. Crude oil at $74 a barrel. It's almost at $74 a barrel right now. It's a key. It's one of the keys to this market, people. Crude oil is the lifeblood of the market. It's the lifeblood of the military-industrial complex. Every time crude falls, watch what happens. They prop it back up by some mechanism. You all know that. I've talked about it repeatedly over and over and over and over again, people. So I'm writing all this stuff down this morning here with you. If you're going to follow one thing, it's the MMRI, Mannarino Market Risk Indicator, okay? Then you should be looking at crude oil, like I just said. Crude oil is a key factor here. Higher crude prices boost the entire energy sector as well as the financial sectors of this market. So right now, look at how we're sitting here. Like I was just saying, you got a 10-year yield 1.495. You got crude oil at 74, just about $74 a barrel. You got risk in this market low, according to the MMRI. Dixie, relative strength of the dollar. Okay, the fiat currencies in aggregate, people, I've told you this a million times, they're dying assets. They're dying assets by design. Henceforth, while we are seeing inflation surge at its fastest pace in history, don't listen to Greg Mannarino anymore. This is being reported, finally, by the mainstream channels, okay, who, they have their own agenda, but we have ours as well. Let them play their games. We're going to play our game. No one plays a bigger game out here than JP Morgan. You all know that. The biggest rigger of precious metals in the history of the world. What just happened 2 weeks ago? The IMF announced that global debt has hit a new all-time record high, and it's not going to stop. We have higher debt now than we had when the IMF, said that. So the IMF reporting, it's not going to stop, okay? That's the nature of the beast, the nature of the debt-based economic model, and you can expect inflation to surge much, much higher here moving forward. Now, I want to bring something else to your attention. Man, I have a lot of stuff to talk about. I don't know if I'm going to get to it all this morning, honestly. So it appears, going back to crude oil, that China is helping Saudi Arabia build new ballistic missiles. This is crude oil positive, okay? So again, they'll come up with whatever they got to come up with to keep crude oil propped up. This is one of the things they're going to do here. Anything that they can do to raise tension in that area will be positive for crude oil. So China now helping the Saudis build new missiles is definitely going to be positive for crude oil, people. As I just said a minute ago here, inflation continues to surge. I want all of you to be prepared, and we're starting to see it already again, people, with regard to waves of inflation. All right, I believe right now we are in the very early stages of a third wave of inflation. I told you when the first one was going to come, and it did. I told you when the second wave was going to come, and it did. I'm telling you right now, another wave is coming, and this third wave of inflation, I've been talking about this last couple of weeks, is going to be worse. It's going to be worse than the previous two, and this is not by accident as well. It's the Fed who's continuing to blame COVID for inflation. No, it's the Fed. They've been printing cash out of thin air, creating it miraculously now since the meltdown of 2008, buying assets with it. I told you for the longest time they're running this inflation creation machine, issuing debt through one door, buying it back through another door, a process which anyone with a fraction of a freaking fraction of a brain cell realizes is massively inflationary. And that, but still, Has the Federal Reserve been called to account? Have they been called by one single member of our loving representatives, called before them to say, why are you running this inflation creation machine deliberately every single day with inflation surging at its fastest pace in history? No, because the Fed is the government. The Fed is the real government. We have no representation at all, and you know that. Anyway, people, what we can expect here, honestly, how do I put this into a perspective that I don't lose my mind about? I tell you, this stuff really does get to me from time to time, people. We understand that we're in an environment of extremes. Okay, we are also in the middle of a new paradigm, a new set of rules. Methods of control are going to get much stronger moving forward. It's not just going to be face diapers and jabs. It's going to be something else. Okay, it's already in the works. Okay, it's just a matter of when they're going to release this on everybody. More variants, like it was laughable. Oh, nobody expected Omicron. I mean, moronic. Oh yeah, but we did. All right, you and I were out here. We knew this was coming, but nobody expected it. You can't make that shit up if you try to. And more are going to come as well here. More modes of control, more methods of control, much harsher, much stricter. That's what this really is all about at its core here as we move deeper into a crisis beyond anyone's wildest dreams. And I'm talking about a meltdown in the financial markets, a credit freeze, an implosion in the debt market. We are already deep in the heart of the creation of this new feudal system I warned would happen from over a decade ago. Extreme haves, extreme have-nots, a complete wipeout of the middle class. And you can rest assured that that is going to get much worse. Life for the middle class people is going to get a lot harder. As a matter of fact, let's talk about that real quick. What did we find out last week? Existing home sales plunged like 14%. Meanwhile, the price rose almost 19%. That's another phenomenon that I want you to pay attention to as well. Look, none of this is by accident. This is a deliberate act to create a new demographic. Very rich and very well-off people over here, and everyone else is going to fall down to the lower rung of society. And it's unbelievable what people are doing to themselves. And I've been covering this repeatedly here. Personal debt, credit card debt, household debt, consumer debt surging at its highest pace, fastest pace ever. These are people who used to be members of the middle class trying to maintain that status by borrowing. It doesn't work that way. You cannot borrow your way into prosperity. I'm sorry to tell you that, people. You know what? I have more stuff to cover here, but we'll do it tomorrow. This video is getting awfully long. It's already like 17 minutes. So look, what can we expect moving forward? Like I said, the setup for this market looks pretty damn good to me. You got a yield curve that's normalizing, 10-year yield 1.49, relative strength of the dollar weak. You got crude oil getting propped up. You got this issue now with China and Saudi Arabia building missiles together. That's going to be positive for crude. You can be guaranteed of that. You got to pay attention to these geopolitical events as well. Clearly, the MMRI is low. We have debts and deficits which are going to continue to surge, which is stock market positive. You have to understand, the debt-based economic model is a curse. It's a curse on the people of the world, and it's run by the central banks. See that? And the Fed. George Gammon, thank you. You gave me that at my party that I threw, that free party that I threw for all of you out here last year. I'm going to do another party next year, by the way. It's going to be free, again, for everyone. I pay for this on my own. It's my way of saying thank you. Had a really nice turnout at the last party, but I'll keep you well abreast of the situation as we move forward. People, look, as I said, and as I say all the time, if we remain steadfast, we can't possibly lose. If you follow this blog, and you've been with me for X amount of time, you are so far ahead of the curve, it's not funny. But if you choose to pay attention, again, to some of these losers out here who on a monthly basis, literally for years, have been calling for market crashes, they've been wrong 100% of the time. They don't know where to look. And some of these people are not even in the market. They admit that they're not even in the market, but they're calling for market crashes? Are you kidding me? What kind of an imbecile would listen to someone like that? I mean, you know, I'm in the market. I am deep in this market along with all of my lions out here. We have skin in the game. And we've been playing this game 100% right. And all of us, if you can't be in the market, if you could be in one thing, what is it? Yes, physical silver, people. You know that. I'm not going to deviate from that either. What you can expect is this price action distortions to get worse across the spectrum of asset classes in this market because of the action of central banks, none more so than the Federal Reserve. And this is all being done by design. It's on purpose. But if we know all this, people, this is our strength. Realizing the flow of cash through the markets, knowing where it most likely is going to go, watching a few dynamics here, keeping your eyes on the MMRI, the relative strength of the dollar, crude oil, the yield curve, 10-year yield, paying attention to geopolitical events. We got this. We got it. It just, look, it makes me all giddy to think about. All right, people, look, awfully long video. For those of you that don't like long videos, I do apologize for that. But sometimes I have a lot of stuff to talk about. And as I always say, this guy here, Greg Mannarino, I will never let you down. I will never let you down. I will stay out here with you doing my 2 videos per day during the week and my 1 on Sunday for as long as it takes. For as long as it takes, even after this whole freaking thing changes, and it will at one point here. Again, we're going to get that implosion in the debt market that it's going to be just freaking biblical. It's going to change the landscape of the world, the financial landscape of the world, and unfortunately a lot of people are going to lose their lives because it comes down to a resource issue. That's really what it comes down to, and I am not looking forward to that. But we're going to get through that too. There's nothing that you and I can't get through. You know why? Because we have each other. You understand? I always tell you that. You know, how we should love each other, care about each other, be charitable. If we do these things, that makes us even more invincible. You understand? We're literally invincible. We can't be beaten. All right, look, I'm out of here. I love all of you a lot. Please share this video. Please get it out there. I think it's very important stuff I covered here with all of you. If you agree, I would love to hear from you. Please place a comment. I promise to read them. I will try to answer a few of your comments here and there. With regard to that, people, I do apologize for not writing back the comments. If you see how many thousands I get, and my email box every morning is like a Christmas tree. It lights up like a Christmas tree. Very difficult for me to get to that too. But again, we're in this together. I'll see you in the morning.